We are now recording the May 31st, 2019 Small Business Accounting Advisors. Hello, everyone.
Hello.
And we have special guests today, Avalara, Matthew Hammond, Rebecca Brandberg, and Mike McKay. Matthew's going to give the demo for us. So, Rebecca, would you like to start introducing yourself?
Sure. So my name is Rebecca Brandyberg. This is my third week at Avalara. So I have come to Avalara as the Senior Partner Marketing Manager, working with Jamie Dunn, Matt, and Mike McKay. I have spent the last 9 years at Intuit. So I did marketing for the QuickBooks Solution Provider program. So it's kind of fun to be on the other side, but I have a lot of historical information and knowledge about Intuit and QuickBooks and all that stuff. So I'm excited to bring that over to Avalara.
That is awesome.
My name is Mike McKay. I've been here just a little longer than Rebecca. I come with a software development background, but I work with Jamie directly as the partner channel manager for the Intuit and Xero space. And so I would be your direct partner contact if you have any questions or need to contact Avalara. So that, so I'm excited for this call. Gina and I spoke probably about a week or so ago and decided to get this going. And I've enjoyed Matt's webinars many times, so I'll let him jump right in.
Sounds good. Thank you, Mike and Rebecca, and thank you, Gina, for having us. I'm really glad we got to do this to round out May and as we head into June and the second half of the year. So my name is Matt Hammond. I've been a national manager here at Avalara for creeping up on 5 years, which 5 years in the Avalara world is a long time. And there's a lot that has changed in the sales tax space over the course of the last 10 months. So I think we're going to cover a lot of good things today that will be very beneficial for everybody on the call and just some information you can relay and kind of digest to then send to your clients or just be able to articulate a little better with what has changed, and we'll cover at a high level some of the new rules and what they're going to mean. And then if we have enough time, we'll open it up to a demonstration and or questions. So if you have any questions for any slide that pops up, please go ahead and type them in. From an agenda perspective, what I want to do is a really high level sales tax overview to begin with, dive into this South Dakota Wayfair ruling, which just happened about 10 months ago, kind of shook the whole sales tax world on its head and has made a lot of phone calls come into Avalara, which is good, and there are a lot of companies getting registered. I want to outline in very full detail and be very granular as far as what is economic nexus, what does that mean to you, what will it mean to your clients, and what do you need to know if somebody asks you just kind of on a whim, well, hey, this new ruling, does this affect me at all? And I'll explain that in its full entirety. And I'll probably put a couple links in the chat box throughout the Zoom meeting just for you to bookmark and have on file. That would be very beneficial. If a client ever asks you about the new sales tax rules, you can send that over to them. We'll dive into what you may need to do. Some companies are going to have to get registered in like 35 states. Some companies may not have to do anything. I'll explain what it means to automate tax compliance, and then again, we'll open it up to some Q&A as we get towards the end. So I'm going to go through the slides in about 20 minutes and then open it up to some Q&A right at the end. So if you have any questions, please type them in. But to begin with, for everybody on the call that doesn't talk about sales tax 5, 6, 7 days a week, like myself and Rebecca and Mike and Jamie, sales tax is really hard. It's just one of those things that's just very burdensome, right? It's not a revenue generating activity, and businesses are responsible for collecting sales tax on behalf of the people they're selling to, assuming they have an obligation to collect tax in that particular state where their customer is located, as well as if what they're selling is actually taxable. And product taxability is going to vary from state to state. So there's a lot of reasons why sales tax may not be applicable when you're completing a sale. One of the most common things that we see is where you're selling to somebody that is not a taxable customer. So they're not the end user. What I mean by that is they may be a reseller, a manufacturer, a wholesaler, distributor. They're just not the end person that tax is applied to. Tax is typically based on wherever you're shipping the product. And when you get to some of these customers where you have exceptions and they're not taxable, you have to get those exemption certificates on file. That's one of the #1 reasons why people will fail a sales tax audit. I spoke with a guy last week, and they're located in California. California is the only state they have tax obligations in. And he couldn't prove why he had $0 tax on like 15 of his clients. He didn't have certificates. They just told him he was exempt and he just didn't charge tax. Unfortunately, it doesn't work like that with the government and the state specifically. So he failed a sales tax audit. It cost him like $15,000. He literally had 3 certificates he couldn't prove, couldn't explain and decipher why they weren't taxable. He just put them as exempt. So there are some exceptions. And then the taxability of your products are going to vary from state to state. And there's about 12,500 taxing jurisdictions across the U.S. today. I believe there's almost 1,485 in Texas alone. I spoke to a lady who felt she had it under control in Texas. It was really easy. And then when I advised her there were almost 1,500 taxing jurisdictions, she got her ears perked up a little bit because she was just charging one rate. So it's very complicated. It's manual, and we're going to talk today about how you can automate some of those steps. So there's a lot of things that go into the actual tax calculations, right? The who, what, when, where, and how. So one of the things you'll hear me say often is taxing authority. Taxing authority is just a fancy word from a state for a state. And you're going to have 45 states plus Washington, D.C. that actually calculate tax and collect tax. So there's 5 states called the nomad states, which I'll dive into here in a minute, that you don't have to charge tax in. But if you're selling to a customer who's exempt, you need to make sure you're marking them exempt in the customer card or the record, if you will, in QuickBooks. If you have a personal website, if you're talking to a client and they have a WooCommerce or a 3D card or a shopping cart that they're leveraging, you're going to have real-time calculations. And then again, the product and service taxability is always going to vary from state to state, and we'll dive into that. And 9 out of the 10 people that I speak with when it comes to sales tax, and most of the time they're controllers or CFOs of a company, but they think that sales tax is based on a zip code or just a rate, right? But there's a lot more that goes into a tax calculation. So you'll have Nexus, which Nexus is an industry term. That means you've established some sort of physical presence or a tie to a taxing authority or a state, if you will. I'll cover economic nexus and then physical presence, what those mean here in a minute, where you may have to collect and remit tax. Number 2, the product taxability. Are you even selling something that's taxable? Are you selling software as a service and it's only taxable in 22 states? I mentioned the jurisdictional assignments, like for Texas, there's 1,500. The exemption certificates, and then once you get all of that right, you get the lovely task of filing and remitting a sales tax return, which is typically where the most human error comes into play. And if you're the only person for your company that files tax returns and you just happen to be out that day, that can be very problematic. And then assuming you would be ready, heaven forbid you go through a sales tax audit. So a lot of things go into the tax calculations. It's not as simple as just a zip code and or a rate. So we'll dive into now Wayfair versus South Dakota. And if anybody on the call has not heard anything about this, this will be very, very informative and very enlightening. If you already know about it, great. I'll give you some deeper knowledge on what's important. But essentially what happened was last year, South Dakota went to the Supreme Court and they said, hey, look, the way people buy and sell products today has changed drastically from 20 years ago. You used to only have a requirement to collect and remit sales tax due to physical presence nexus. And what has changed is they now said, hey, the way people buy and sell products is different. You can order something on Amazon, you can order something on a marketplace, it can be at your house in 2 hours. And the Supreme Court agreed with South Dakota, and they decided to overturn the ruling that had been in place for many years, and they decided to allow states, South Dakota specifically, to start charging tax on out-of-state transactions. And I'm going to cover that in a very big picture and dive a little deeper here shortly. But what it means now for almost every seller that's out there and the small to medium-sized business, that your customers are now controlling where you have to collect tax. I'll give you some specific examples here shortly. But if we look back at what happened over the course of the past 10 months, I mentioned there are 45 states plus Washington, D.C. that actually collect tax. 37 of those 46 states have adopted an economic nexus threshold. So if you're only located in Florida, but you ship all across the country, everybody ships to every state, right? There are 37 states now where if you sell a certain amount of transactions or revenue, you're going to have to get registered, even if you never go to that state. So it's very critical. A lot has changed. There's 10 states that have put tax collection for marketplace sellers. I think it's like actually 11, 12, or 13 now. Like Amazon will remit the tax based on for their sellers, as well as eBay, only in a handful of states. And again, that's only for the tax that's collected on the marketplace. A handful of states put use tax reporting, and then there's a couple states that put click-through nexus. So if you had you have a partner you work with in Tennessee and they have a banner on their website advertising your product, you potentially have to get registered in that particular state for tax collection. So a lot has changed over the course of the last couple of years. And the first state to do this was South Dakota. And South Dakota's thresholds, if you will, were if you do $100,000 of sales, or being the key word, 200 transactions into South Dakota, you have to get registered. So think about this for a minute. You sell cell phone covers or cell phone cases for an iPhone, something really cool. No one's ever put on the market. It's now brand new. And all of your inventory's in your garage and you live in Florida. Well, if someone in South Dakota, who may be a little different, really, really likes your cell phone cases and they buy 200 of them, you would then have to get registered into South Dakota. You would have to get registered in South Dakota to collect remit sales tax and file a tax return. That's what changed. And what I've advised most people, and I'm not a CPA or a tax attorney by any means, but what has changed is that now you have to look at the states that you sell the majority of your product or the states that you have the highest revenue dollars in, and see if those states have an economic nexus threshold. And you'll see here it was argued on April 17th of 2018, and then just a few months later in June, they decided to rule in favor of South Dakota because, again, the way people buy and sell products today has changed. You used to always have to go to a store or drive somewhere. Again, now you don't have to leave your living room, right? Everything comes to your doorstep, which is great. Personally, my wife doesn't leave the house on the weekend. Her goal is to literally not take a shower on the weekend. I'm like, that's perfectly fine. Amazon will be delivering Sunday morning. So, a lot has changed, and this is a rule that has, truly turned everything upside down over the course of the last few months and over the last couple of years. And you're going to have to, the way people manage sales tax and QuickBooks specifically is going to be very important moving forward. And some of the top questions we get are, if I'm already registered in a state, does this apply to me? If you're already registered in South Carolina and Virginia because you have locations there, this rule means nothing. This is really important to the states that you have no tie to, you don't go to, you don't have inventory, you don't have people there. You now will potentially have to get registered, assuming they have an economic nexus threshold. Number two, does the ruling apply to online transactions? And the answer is no, because some people don't sell on a marketplace or don't sell on a website, right? If you're a QuickBooks company and you do HVAC, you don't have online sales, right? You're entering orders into QuickBooks and invoicing out of QuickBooks solely. So it doesn't just apply to online transactions, it applies to sales in general. And the last one is, does economic nexus rule apply to non-taxable transactions? Which is a really good question. It's one of the most common ones we get. And unfortunately, it doesn't change what's taxable or not. However, you have states that have determined, like South Carolina, which is just south of me. I'm in North Carolina, which is an example where they said, we don't care if what you're selling is taxable or not. If you do $100,000 worth of sales, you have to get registered in that state, even if they're not taxable. So wholesalers, manufacturers, distributors, they're now having to get registered in a lot of new states simply because they're hitting a threshold of the sales and the dollar amount. So again, it's been very difficult and a lot has changed rather quickly. And I'm going to outline here in a minute really what some companies need to do and then how impactful it is based on your business. And one of the things that's really important as we walk into the definition of economic nexus is for everybody on the call. And if you've never heard this, hopefully this will be helpful and you'll have a little better knowledge on, what does it mean for your particular clients or yourself in general. So economic nexus is a tax collection obligation imposed on sellers based on their level of economic activity in a state. And if you think about it like this, one of the things that's really important is it's based on the sales revenue and or the transaction volume. Most states are $100,000 of revenue or 200 individual transactions. So if you have states where you never go to, or your clients never sell into, or they do sell into it and they're nowhere near $100,000 or 200 transactions, this rule is not going to impact them. But the goal is to level the playing field. I mean, sales tax is for companies, it's a non-revenue generating activity. It's free money for the states. They just have to put a law in place, and then they're going to get, hundreds of thousands of dollars worth of sales tax. California, particularly, they've been trying to pass a law for years to tax services. And when they do eventually pass that law, it's going to be $500 million a year just in free revenue to the states. So states are hungry for revenue, and this is an easy way for them to, to increase that and change, what their numbers are from a year-to-year basis. So this next slide will give you a really good visual for the amount of states. So what I like to tell people, and I'm going to kind of tell a little bit of the story while everybody can read everything. You can see the timeline on the right, and then a handful of facts on the left. But let's say you are you sell big furry winter coats, and you're located in Pennsylvania, right? And the majority of your sales are in the Northeast. So what you would have to do as a small business, you'd have to look at all of your sales in New York, Rhode Island, New Hampshire, Maine, Massachusetts, Connecticut, and see which of those states you have the highest dollar amount of sales. And then if those states have an economic nexus threshold, you would then potentially have to get registered in those particular states. So if you never sell anything to California, or you never sell anything to Texas, for some reason people in Texas don't buy your product, or nobody in California likes it, or it's just not a product that they leverage in one of those states, then you don't have to worry about anything. Number one, you have to worry about the states where you're located in, and then also where you sell the majority of your products, or where it's most popular. And then again, there's 45 states plus DC that do collect tax. There's 5 states that don't. Those are the nomad states, which are New Hampshire, Oregon, Montana, Alaska, and Delaware. So 45 states plus DC, and 37 of those 45 states have put an economic nexus rule in place. Our experts and internal folks here at Avalara have said that other than those 5 states, this entire map will be colored blue by the end of the year, which is extremely challenging if you have to manage sales tax in a platform like QuickBooks, and specifically if you're selling something that may not even be taxable. Software as a service, installation, shipping and handling, freight. Those are all things that have varying taxability. Most people that are selling on a marketplace or Amazon, eBay, or Etsy that are a small business are selling something that's fully taxable, TPP as we refer to it on the Avalara side, and that's just something where you're always going to have to charge tax. So prior to the economic nexus setup, there was physical presence nexus. And this is where I like to tell everybody, where if you look at everything you see on the screen right now, do you have any of these outside of the state that you're physically located in today? So if you're a business owner and you live in South Carolina, but you have another location in North Carolina, you have data centers in Philadelphia, you cross state lines to go do service or repair, you have contract employees in a state, you have board meetings in Hawaii once a year, or you go to Seattle or something for a marketing or doing web advertising or drop shipping. These are the top 10 reasons why companies have to get registered to collect or remit sales tax outside of the state they're located in. So any of these things you see on the screen right here are typically going to require you to have to get registered in a state other than the one that you're physically located in. And you'll see on the very bottom right, inventory. And as I segment and transition in to go talk about the marketplaces, inventory is one of the number one reasons why people have to get registered, because you have a lot of people that are selling on Amazon or eBay or Etsy or Walmart or Jet, where they have inventory in other states. And a lot of people are now moving to the Amazon FBA model, so fulfillment by Amazon. And what's very critical with that is that there are 30 states where Amazon has warehouses. 27 of those 30 have stated and deemed, and again, you can go on the Department of Revenue website for each of those states, that third-party inventory is a nexus creating activity. So the moment you enroll in the FBA program, Amazon has an algorithm where they can ship your products all across the country. They can put your products in Massachusetts, Texas, California, wherever. They have an algorithm where they know where your customers and the majority of your people are buying your products from geographically, and then they can shift your inventory to the side of the coast or wherever to get those to your customers the fastest. So the implications of that are, if I'm a QuickBooks user and then I also sell on Amazon, I do FBA, that means I would then potentially have to get registered in 27 states and then also maintain and manage the sales tax portion of that in QuickBooks, which nobody wants to do. It's very, very difficult. So enrolling in the FBA program and selling on Amazon or any of these other marketplaces can make it very challenging from a tax compliance perspective as far as getting registered, calculating the sales tax, and then filing sales tax returns as well. And the next couple slides are going to be a couple screenshots for what you see in Seller Central. Amazon's really smart. Obviously, they're one of the biggest companies in the world, but they will not allow you or allow a seller to collect sales tax until you put a tax ID in your tax settings. So you have to get registered to collect your tax before you can actually charge tax on Amazon, which is really important. And the next one you'll pick, once you realize you have to get registered in a few states, you'll add additional states. I mentioned most products sold on Amazon are tangible personal property, so they are fully taxable. However, you're selling something like clothing and apparel or something like that, like New York, if you sell clothing and it's under $110, it's not taxable. The moment it goes over $110, it does become taxable, but you'd have to set that information up within Amazon. And I'll walk through what that means on the Avalara side if you're not selling or if your client wasn't selling on a marketplace. So Avatax and Avalara, Avatax is our flagship product, and that's a direct plug-in to QuickBooks Desktop, QuickBooks Online, basically every version of QuickBooks except the Canadian version, and then also if it's QuickBooks on a Mac, that can be problematic for our connector. But what would happen is once you download our connector, we're going to look at the ship to address, we're going to look at the ship to address on the invoice. And as long as the ship to address is in a state that you have told Avalara you want us to calculate tax, when you go to save an invoice, an estimate, a sales order, a quote, any form of an order in QuickBooks, it's going to reach out to our tax engine, which is represented by the A in the cloud. And then in real time, we're going to properly assign the rates, properly assign all the rules, and then make a tax determination and put that back into QuickBooks in under a second as an additional line item. We do a lot of things in real time. It takes about 0.2 of a second, but we're actually going to convert that address to latitude, longitude. We do rooftop level calculations within Avatax. We don't use zip codes. And then we're going to look at each individual line item on the invoice and determine if it's taxable or not. Part of leveraging Avatax and using our plugin is telling us what you sell, what states you need to collect tax in, what forms you file, and how often, and then we can do everything else. It's not 100% outsourced. If I said that, I'd be lying to you. Once you get it all set up and you download and you set it up right, it's about a 90% hands-off approach. Once we've done the determinations on the front end, we can then offer the filing and the remittance on the back end, where we can file the returns to the states, we can remit the payments, we handle local tax jurisdictions like Colorado, Louisiana, and Alabama, as well as filing your monthly prepayments in California and your quarterly tax returns. I like to phrase it where we can help as much or as little as you want. Some people have somebody at the company that has been filing the tax returns for 30 years, and nobody else is going to do it other than him or her. So that's fine. We can still calculate the tax to provide rooftop level calculations. You'll see at the very bottom of the slide, Avatax does not support cash basis accounting. So we do require companies to be remitting tax on an accrual basis. As long as you're getting paid, typically within 30 days of the invoice, it's okay. Because if you're a monthly filer in Georgia, we leverage the date on the invoice as an anchor. And if you're not getting paid for 3 months or 60 days, that could be problematic for us to file the return. So we do typically state with full confidence that we do require you to be on an accrual basis for sales tax in order to leverage our end-to-end solution. And again, any questions, please type them in the chat. I'll open it up here in a couple minutes. We only have a few more slides. So this is an example of why zip codes are not the right tool for the job and really what Avatax does. So this is an example of this is the same zip code in the same neighborhood and the same street in Commerce City, Colorado. So all the houses in blue have a composite tax rate of 9.25%. All the houses in green have a composite tax rate of 4.75%, which is almost a 5% delta from one side of the street to the next. I don't know what the guy did at 7495 Locust Street, but he got a heck of a deal on his house. So this is why we say if you are using zip codes, or you're using the typical tax determination that comes in QuickBooks Desktop and QuickBooks Online and any other platform for what it's worth, it's not accurate. It's not going to determine if what you're selling is taxable. And if you had 1,000 orders a month, again, somebody at Locust Street, $74.95, really liked your product, and you charged $4.75 when you should have been charging $9.25, that could be very problematic when it comes time to file a remit. Because at the end of the day, the state doesn't care how much you charge. They could care less if you charge 4.75%. But if they know they're owed 9.25, that's what you're going to have to put on a tax return. So this is why we say zip codes aren't the right tool for the job. And Colorado is one of 3 states that are really funky and really challenging. So Colorado, Louisiana, and Alabama, if you have clients or you talk to anybody that's in any of those states, they could definitely benefit and leverage AvaTax to help automate tax compliance for their business. So I'm going to talk about a free offering. Everybody loves free. Anytime something free pops up, I always feel like we end up getting a sample or something like that in my house. But the SST is a program that Avalara has partnered with. So the Streamlined Sales Tax Initiative, it's a group of 24 states that got together, and I'm not going to read all this. I'll leave it up here for a minute. But essentially, all these states got together, and they wanted to find a way to simplify the sales tax collection as well as the filing and remittance. And Avalara is actually one of 4 certified service providers that partners with the SST team. And essentially what we make it is to where you can leverage Avalara for some free offerings. And again, it was created in 1999, but it's going to be very important to talk to Avalara and my sales team in particular about how we can help leverage this free tool. And what's really cool is there are 24 states that are members for the SST, and you can see them on the screen here. But if you're leveraging Avalara, we offer to get you registered for free in those states. We'll calculate the tax for free in any of those 24 states, and we'll also file the sales tax returns for free in all 24 of those states. So that means you'd only have 22 states of the 46 that collect tax that you'd have to pay Avalara for our services. So it would be calculations, returns, and filings. So the SST is very, very important. There are a couple stipulations that you have to meet to be a volunteer remitter. So as long as you don't have $50,000 worth of property, $50,000 worth of payroll, and you haven't established a business in that state, like a location, in the last 30 days, you can be a voluntary remitter, and then you can leverage Avalara for all of the free offerings. The key component is you have to use AvaTax. We have to plug into your platform. We have to calculate it. You have to use our tax code, so there are tax determinations. For example, I had a lady last week who 75% of their transactions and sales were done in QuickBooks, and then 1/4 of them were done on Amazon and eBay. So she has to upload the Amazon and the eBay transactions to AvaTax so we can recalculate the tax and use our tax codes, our product taxability, if you will, in order to file the SST return. So it's a very cool offering. You're going to see a lot more of the SST and Avalara probably advertised on the internet or pop up in anything you're seeing online right now, because it's a big initiative. But it's a great way to get some free services and free tax compliance. So, and again, any questions, please type those in. We'll add to those here shortly. So I mentioned earlier, Avalara can help as much or as little as you or your clients need, right? We can help determine if you need to be collecting tax in a certain state. We'll do a nationwide nexus study for $4,500 where we can then ask you a bunch of questions about your business and prior activities and determine based on a very customized report if you do have tax obligations. We can also help address past liabilities. If you have a bunch of exposure in a state and you need us to go to the state anonymously and try and mitigate that risk and ask for penalty abatement, we can do that as well. If you just want to get registered in 24 of the states that, 22 of the states that are non-SST, we can help get you registered. The prices for registrations are $199 per state. Typically takes about 2 to 3 weeks to get registered. And then we have a couple filing options. We have kind of a white glove, fully managed return service, which is roughly $50 to $54 per tax return filed. And then we also have kind of a lightweight, do-it-yourself filing offering called Trust File, where it's not going to do any tax calculations, but it's going to just file the tax based on whatever you have. And I'll walk through that here in a minute. But what I have learned over the last couple of years at Avalara, and this is kind of a motto I try to leverage to myself and the sales team, is, do what you do best, and then outsource all the rest, right? Sales tax is our problem. Let us handle it. right? If I know my toilet is broken, I'm definitely not going to try and fix it. I'm going to call a plumber because he works on toilets. So do what you do best, outsource all the rest. Let us handle the sales tax compliance. We're very good at it. We have 124 people alone in our company that all they do is file tax returns. And we must pay them well because they seem happy every time I see them, but they have a grueling job. That's all they do is file tax returns. They work on the weekends at any rate. But, tax is not easy. It's very complicated. It's getting more complicated, and we can help as much or as little as you need. So we're going to cover pricing and a couple products on one of them. This is my second to last slide. So thanks everybody hopefully everybody's still with me. We have Avatax on the left side, which is a direct integration, and that starts as low as $50 a year. If you're a QuickBooks online company and you just started your business and you're just trying to turn it on and leverage tax calculations because you're in a tricky state, it could be as low as $50 a year. And Avatax is a direct integration where we plug into QuickBooks Online, QuickBooks Desktop, or whatever platform you're using, calculate the tax, determine product taxability. And then on the right, we have trust files. So I've spoken with some folks in the past where they only sell on eBay, but they have QuickBooks as a general ledger and they just need a filing tool. Or you sell something that's fully taxable and you don't need us to plug into QuickBooks because Avatax is too much for your business. Trust file is just a way to file the tax returns, remit the payments to the state. Roughly $18 per turn every time we file a tax return. We made Trust File and built the product for marketplace sellers because folks selling on marketplaces typically just need to make sure they have some sort of form or fashion to be able to file tax returns. A lot of people didn't really know that they had to file tax returns when selling on a marketplace, so a lot has changed over the last 5 to 7 years. But we have a couple options. We like to start with Avalara as your tax compliance provider and then figure out what solution is best for you. So I will put this slide back up here in a minute, just with my email and information. And you can also reach out to Gina if you have any questions ongoing. But we have a great partnership and we have a direct integration with Desktop Online, Pro, Premier.
Look, you have my logo there.
There we go. Yeah. So I will leave this up for a couple minutes and I'm going to pause. I'm going to check I think I may have some chats in here. So let me see if there's some questions that come up. I'll answer these and then I'll turn it back over to you, Gina, if you have any other questions. So are the thresholds on gross sales or taxable? So every state is different. And actually, I will put a couple things in the chat here that these will be really good to bookmark for everybody on the call. So we have our South Dakota Wayfair page, which is very important. And this would be one I would bookmark and send to your clients. This will have the thresholds in the individual states. Some states, they care about taxable sales only, but South Carolina, for example, doesn't care if it's taxable or not. They just are looking at total number of dollar amounts.
So how do you file a tax return if you meet that threshold but have no taxable sales per se? $0?
Mm-hmm, exactly. Yep. It's the same as if we had dollar amounts and tax on it for Avalara. We file $0 returns, just like Retreat tax return that's got $100,000 worth of tax.
And if you don't file it, you get a fail to file penalty, right?
Mm-hmm. Yep. And Dennis, I'll definitely send out a copy of the slide deck. Not a problem. Next question: how do you know if you use Amazon the warehouses? So you can pull a report. There used to be a report that you could pay to find out where your inventory is, but there is a way to export your transactions and your data out of Seller Central to find out where your products have shipped from. Because if it's shipped from Massachusetts, then you would know that you clearly had inventory in that particular state. And again, there's 10 to 14 states that the marketplace is remitting the tax on behalf of their sellers. But that's only for the channel of Amazon. So if I only sold on Amazon and I was doing FBA, there are a handful of states that they'd be remitting the tax for, potentially wouldn't have to get registered. And I have a bunch of good links. Let me find this other one. I have one for, let's see here. Give me 1 second. I'll put it in the chat here momentarily.
So that's okay. A little bit crazy. I mean, all these rules and regulations just like.
Mm-hmm. And I don't want to scare anybody with the links I'm putting in there. But if you click on those and the last one I sent, it will give you essentially kind of advice and requirements on the states where they are the marketplace facilitators, where if you're out of state, it'll tell you for the most part you're not required, or if you are. But again, physical presence, any state where you're physically located, you have inventory or employees, you need to be registered either way. The other rules that are coming into play now are if you just sell a certain amount into a state that you're potentially going to have to get registered. And the first link I put in there, the South Dakota Wayfair, that's the one you want to look at and see if you scroll down which states have economic nexus and what their thresholds are. Oh, I love it. How do you make money on SST if it's free? I would let a VP at Avalara above me answer that question. So I'm going to bypass that one, Dennis, and sorry to call your name out. Do we have a certified advisor program? I don't know.
We have a partner program.
We have a partner program and a partner portal, and that's what Rebecca and Mike will manage on our side, where if you send somebody to Avalara, we'll reference them and tie them to you specifically or Gina as well from a partner perspective. And we offer commissions on the software piece itself. So if you're leveraging Avalara for the software, we do offer a referral and a commission for that. One more question came in.
Reach out directly to me and I can help you if anybody's interested in the partner program.
Perfect. 95% of my customer sales are to resellers, but 5% are individuals. So what is a dollar amount for sale for taxable? A good question. So again, it really does depend on the individual state. You're going to see a lot of companies that are going to have to get registered in new states, number one, which is going to lead to more exempt customers or exempt sales, if you will, so more exemption certificates. Avalara can also help to store, maintain, validate, and manage the life cycle of exemption certificates on an ongoing basis. And so for the 5% that are individuals who probably need to be charged sales tax, you know, it's as simple as telling us what state you want us to collect tax in, and then obviously we can help get you registered. You can't collect tax without being registered. That is a felony. I told myself I wouldn't say the F word on the call today. But yeah, you don't want to do that. Don't charge tax if you're not registered. You can leverage Avalara to do that as well. One customer participates in trade shows in other states. Yeah, trade shows can be a nexus building activity. Really depends on their volume. Texas specifically has stated that if you are going to one or more trade shows in that particular state, you potentially will have to get registered in that particular state for tax obligation. Next question, the state of Washington has a combined business and occupancy tax. So we do handle that. We can remit it. It's part of a tax return. Very standard. Avalara is actually based in Washington, so we're very versed in the B&O tax. A great question. And I will pause there, Gina, unless any other ones come in. And if you want to make any comments,
I'd like to go back to pricing, because pricing really has been very confusing for me. And I understand you've got two different programs. One's the full boat, where you determine the tax, you file, you remit, and all of that. And then you have another, you called it Trust Light.
Yeah. Let me dive into it. So for a QuickBooks user, and I just dragged this over to the screen. Can you see my Word document? It's not pretty, but it's going to show everything. So
hey, Matt, real quick before you jump
go ahead.
I just wanted to say goodbye because I have another call at 3 with Intuit that I need to jump on. So I just wanted to thank you for having us today, Gina, and we'll be talking to you soon.
Thank you, Rebecca, for joining us.
Okay, bye-bye.
Bye-bye.
Bye, Rebecca. So AvaTax, Gina, is our integration to QuickBooks, and it starts as low as $95 a year. So if you're a smaller company and you're only doing, you know, a couple hundred invoices a year, it starts as low as $95 annually. Let's say you have a lot of transactions. Let's say you're doing 10,000 orders a year. And again, keep this in mind. This is in the states you have to collect your remit tax. 10,000 transactions would be $2,495 a year. So this is actually probably the most cost-effective solution that we offer, is just to plug into QuickBooks to calculate the sales tax. And then on the right side, you'll see our fees for filing the tax returns via Avalara and our managed return service. So we have two options. One is a buy down, where you pay us an annual fee, and then we just bill you every time we file a tax return. That's important for companies that are getting registered in new states and they have no clue how many returns they're going to file. One of the most common questions I get is, how often do I file and what forms? And it's a good question. I wouldn't know it if I didn't work at Avalara and talk about sales tax every day. But the states will determine your filing frequency, as well as what form you file as you get registered. So they'll tell you to file the DR 100 form monthly in Colorado, and then that's when you're going to then tell the Avalara software which form, how often, sign a power of attorney, sync your banking information, and we'll do all the rest. So you have our calculations on the left side, our pricing for returns on the right side, and then there's a handful of other things down on the bottom. If you do a nexus study, if you want us to get you registered in the non-SST states, if you need to do a voluntary disclosure agreement, if you need to do backfiling, and yeah, so I'll pause there. Gina, questions on kind of the pricing, if you will. I want to make sure we cover this and everybody's kind of on the same page.
Okay. So would you do a remit without the AvaTax? Like if someone, I'll say in Pennsylvania, we have one tax rate, 6%. I'm excluding Pittsburgh and Philadelphia. Say we only have sales in Pennsylvania, 6%, file it every month.
If that's the case, then I would tell you to leverage our product called TrustFile. And TrustFile is $240 annually and then $18 per return, or you can pay monthly, where you wouldn't need our calculation. This would sync automatically with QuickBooks. It'll send all the data into QuickBooks for returns filing purposes. So the folks that are leveraging AvaTax in a real-time calculation, where we're calculating the tax, that's typically where they leverage us for the white glove service. Most folks that don't have AvaTax or are not having our plug-in to their platform for live calculations or selling on a marketplace, we offer TrustFile.
Got it.
But I'm really biased to be completely transparent with everybody. I mean, the AvaTax product, which is the rooftop level calculations of product taxability, if you're solely invoicing out of QuickBooks, it makes the most sense. Make sure the tax is calculated properly, what you're selling is taxable or not. So that's kind of why I typically stick with this pricing. I'd be more than happy to send this over to you, Gina, when we get off the call.
And if you don't mind, I'll copy the chat and all the links that you've put in there and share that with our group when we're done.
Perfect. There's another question that came in. Let me go ahead and jump in here. We talked about the B&O part. So right now, marijuana is a cash-based business. Yeah, that's one of the industries where Avalara can't unfortunately support if they're selling more than 3% of 0.03% of THC. We're not privileged to sell and work to those clients, and I have to defer to some of the other folks at Avalara to explain that. But I mean, that's just an industry and a business that I don't know if we're going to be fully tied to, integrated with from a compliance perspective, just with legislation. So I'm trending very carefully for the question as everybody's on this call, and it is being recorded for why and whatnot. But we do help a lot of CBD companies, but as long as they typically don't have under 0.03% of THC, we can sell to them. We do require them to sign an addendum waiver, so to speak. And I'll stop there.
Awesome. I see that you have a special deal for anyone that mentions my name.
Oh, Gina Rodke, that's a great name.
Definitely. And if you're gonna send clients or anybody's gonna come to us to leverage us for our product, we'll work with them and get them the best possible deal. We have some single stay offerings. We have some activation fees we can waive. We'll definitely take care of them. I typically tell everybody we're never going to lose your business on price. If the integration is there and you have the need, we'll 100% make it work, and we'll be able to tie everything back to Gina.
Absolutely. Now, the last thing I'm going to ask is, do you want to tell us a little bit more about your partner program with accountants and bookkeepers?
Sure. I'll let Mike talk to the
Sure.
partner piece and how that works.
Sure. So we have a partner program where you can work directly with Jamie and myself. Jamie was not on the call today, but she does the same thing I do. We are your direct contact. So as Jamie likes to say, it's white glove concierge service. So we're direct contact, and we work with Matt's team, the sales team in Durham, and we will gather the information and then get it over to Matt's team so that you can jump in front of the line on some of these. Some of the calls are backlogged quite a bit. What else? So we also have a commission. So we have you can earn commissions based on referrals for your clients. We have a bunch of co-marketing stuff that we can do, and we can do stuff like this webinar, for example, and those kinds of things. So, yeah.
Okay, great.
Any questions about the partner program? Queen Russell.
Yeah, I wanted to just give you a shout out. Again, I just had one customer on it, but now I think I have 2 other customers I'm going to try to add in to your program. Will you be willing to work with us to try to help to figure out the best program for those clients?
Of course. Yep. Just if you just email me, and we'll set up a time to chat, and we can talk about them and see what see what we can do for them.
Perfect. And because one of them does sell on Amazon, and I am not quite sure what their program is with that. I will ask them about that. And the other one sells using Shopify, and they all ship out of California. And I think that would be, but they're the customer. 95% is resale and 5% is traditional, and they also have trade shows and sales reps. So I want to make sure they're covered because they're a profitable company, and I would hate to see them get hit with penalties. So.
Yeah, and let's have a conversation with them. I mean, let's walk through what product they may need. I mean, if they're going to walk or if they're going to talk to somebody on my sales team here, I mean, it's a case by case basis, right? Every company's different. Every company has different requirements, and we can definitely put them in line for the best solution for them and definitely get them taken care of.
And I wanted to give a shout out, especially to James Nunnally, who I think you mentioned is still working at Avalara.
Yep.
Oh, yeah.
He discovered that when we had the data company we had brought from QuickBooks Online about 5 years ago into QuickBooks Desktop, mainly so we could use, well, it's a long story, but the company, the main corporate had 2 companies, and so since they had desktop already and they weren't going to switch it because of the inventory, they brought the other one back. But James Nunnally was the one that was very, very helpful at discovering that when we did that, it did not bring the company name information over, the name and address information, which was why we couldn't get the Avalara tax to work. And your guys were like fantastic working with us to make everything work really, really well and be worth the money we paid. So
I will pass along the shout out.
very good.
Thank you.
Thank you.
Is there any more questions from anyone? No? So I think that's it. Thank you guys very much. Very informative. Learned lots. I'm going to go back and rewatch this once this gets posted. Thanks again for joining us. And if anybody has any questions, you can send them to me. I will pass them on. I'd be happy to.
Awesome. Well, thank you for having us, and we hope everyone has a great weekend.
Yes.
Alrighty.
Thank you. Thanks, everyone. Okay. Bye-bye.
Bye-bye.
Bye-bye.